Hi, welcome to the Market Alert for Monday, the 8th of August 2022. So July payroll smash expectations soaring to 528,000 new jobs created. Wages come in red hot as unemployment rate drops. We are now well and truly in bizarro world, and I couldn't agree more. As I keep referring to it, the twilight zone. So other news, Wall Street reacts to today's phenomenally strong jobs report. The Fed will not be able to ignore that wage pressure, makes the hard landing scenario more likely. And hot jobs report sends yields dollar flying as Fed pivot belittled. And news this week, Wednesday, CPI from the US. So we were leaping from one to the other, although I have to say, I look at this forecast of 0.2, previous 1.3. This is going to be laughable if it comes out at this rate, just a 0.2 increase in inflation during the month of July. Let's wait and see, but that's what the market's going to be waiting for. So until then, it's going to continue to move to the upside. PPI, again, inflationary on Thursday, and then Friday we've got GDP from the UK and a prelim GDP from, that's both from the UK, and then prelim UM consumer sentiment as well. But this is going to be laughable, I have to say. That will be laughable if it comes out at 0.2. We already know it's being rigged anyway. You have to go to Shadow Stats, John Williams' website, to actually see, because he still bases the inflation rate on the 1980s basket of commodities. And it's somewhere in the region of 17 to 18%, which is more likely to be the case. And the gold-silver ratio, you can see they're up on Friday, down on Monday so far, but we'll see that in more detail when we look at the precious metals. So kicking off with the markets, the Dow, the market Friday traded down to 38% retracement and then rallied all the way. We're taking out these highs. The market's insane, and we're going back to the all-time highs. That's what they want to achieve here, and of course all they need is that CPI number to come in at that sort of level on Wednesday, and that will be enough to send the market up, because then it takes the pressure off rate hikes, etc., etc. So yeah, it's a one-way bet at the moment. Trying to go short in this market is just insane. We've gone past this waterfall situation to more green bars than red bars, and that's how it's going to continue in the short term, unless something on the war front. But then saying that, you've got China simulating attacks. That's not making any difference. There was a kickoff at the weekend with Russia and Ukraine. That's making no difference. The whole thing is being ignored now. They want the market back to the all-time highs, and they're determined to do this. And I wouldn't be surprised if they don't actually achieve it. If you look at the monthly chart, you'll see there that we're making progress back to the upside now. And if I was to draw in these retracements, you'll see we're at 62 there. Let me just bring in some smaller numbers there on this monthly chart, so that we can cover the full range of fib retracements there. So here are the upside targets. You can see we're already through the 38 and we're heading for 50 now. So 33,300 is the next longer term target. 62% retracement's got the 20 bar moving average in the way, but you can see the market's coming back up nicely there. And this is the same for all stock markets. In the German DAX, this also down on Friday, but it didn't really sell off at all. As you can see there, very narrow range despite the bad numbers. Market bouncing off the 5 bar moving average and now moving back up towards that 62% retracement. But just widen this out and move it over to the left. I'm just going to get rid of a few of these lines here, and in the short term you've got from here to here, and these will be the upside targets for the DAX over the next few days. But certainly the 62% retracement, the recent high of the pink line there, is on the cards. In the 30-minute chart, in fact I need to go back to the Dow. I've forgot the 30-minute chart just to show you on Friday what actually happened. So let me just nip back to that. Getting ahead of myself here this morning. Yeah, here's the non-farm payroll numbers. The 528,000 created went down to the S2, and the selling just vanished in the next 30 minutes. So we're shaken out, and then we're brought back, and then we have a beautiful 62% retracement there. So from there to there, 78.62. There you go. You can see there. You've got the demand coming in there. The momentum's still moving to the upside, and then that was it. It was just brought back, and it's going up now. We've only got to take out the high of Friday, and we're back to square one, and all of this is ignored. And we could carry on moving to the upside, like I say, which I've just shown you in there. So let's get back to the DAX, and I'll try and keep it in order now as we work our way through the stock markets. So yeah, in the daily DAX, you can see there 38% retracement at the moment, and in the 30-minute chart, you can see a bit choppier as the market sold off, then bounced, and this time actually took out the low. But you can see it's making its way back to the upside. The only thing that I will say is the DAX is a lot weaker than the Dow at the moment, because obviously what's going on in Ukraine and Russia, it seems to be holding it back a bit, and plus the fact, as far as the economy is concerned and economics, Europe is in pretty rough shape when they can only just increase interest rates by 0.5% when inflation is running, as we know, between 17 and 20%. So no chance really. The high is up here. Keep an eye on that. And like I say, in the daily chart, you've got all of the fib retracement levels there. Again, not a red bar in sight since these last two. So for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days straight, the market closing back above the 5-bar moving average, despite trading below it. That's how much strength it's got in bringing this market back to the upside there. 5 minutes overnight, you can see the market has gapped. Yeah, we started off on the 7th of August there, just before midnight. Market moved lower, and then it's gapped up, and then come back and more or less filled the gap. You see the 5-bar moving average having a bit of an impact on, not the 5-bar, the 200 MA having a bit of impact on the prices overnight, but being held by the 50 and then moving to the upside. You can see prices are driving higher, and when we get to the futures opening, we'll be screaming up to the high of Friday. Like I say, then everything will be discounted from the non-farm payroll numbers, and there we go. There's the high for Friday in the 30-minute chart there. And trades for the week, we've got a profit of 1014. We've got 57 to 43 win-loss ratio, and 1.83 there for the profit factor. So a bit of a choppy week, but a profit nonetheless. As you can see, it's consistently moving in the right direction there. And in the S&P, very strong as well. As you can see there, the market trading to 89% and holding above this. We've just got to take out the recent high to the left, and then we continue to the upside as well. If I got a monthly chart, yeah, there's the monthly chart of the S&P, very similar to what's playing out in the Dow at the moment as well. So there you can see, having come back to 62, 78% retracement, 50 EMA. This moving to the upside as well, very strongly there at the moment. 30 minutes of the S&P, again you can see the bad news soon becomes good news, and again watch the high of Friday, because that just takes out everything else, including the morning weakness, and then sends the market continuing on this upward trajectory towards the all-time highs. Daily for the FTSE 100, not quite as strong, but again you can see just the one red bar in the last few days. Is just another one there where prices have closed below the 5-bar moving average. But the short squeeze remains to the upside at the moment. Nobody wants to short, and again in the 30-minute chart you can see shrugged off completely the non-farm payrolls back above the 200 MA, and then the retracement, and again just making its way back up to this high, as we can see here. In the currencies, the Japanese yen also having a very good day on Friday, rallying back up in the daily chart. 62% retracement is giving the market a bit of grief, as is the 50 and the 20 bar moving average. Need to take these out in order to head to these other fib targets. 30-minute for Friday, you can see that we sold off a bit, but then as soon as the non-farm payrolls hit, the dollar went up. The yen up, and also you can see we're already at Friday's high for the yen. The pound shaken out as the dollar moved higher, but down to 62.78% retracement there. 30-minute chart, you can see this big drop, over 100 points to the downside, finds support, and then moves back. Nowhere near the high for Friday at the moment. Dollar showing some strength as Friday's chart will show in just a moment. And then finally in the metals, let's start off with the silver market. Absolutely monkey hammered on Friday, but coming off the lows. Like I said before, it's starting to show some strength. I was hoping that we're going to get a hammering back down to these lows, but it's not looking like that at the moment, unless the stock market starts falling apart. Otherwise, it's going to maintain its strength, which is, like I say, is a bit of a shame. Certainly coming off the lows as well on Friday is indicative of the market wanting to move higher. In the 30-minute chart, after the shakeout, they never miss an opportunity, straight down to the S3 and also the 1950 level, which the blue line is here. We see the buying coming into the market, and then we retrace, but we've not got back to the DP level or where it sold off yet from Friday, so it'll need to do this in order to attack the high of Friday. Gold also hammered to the downside on Friday, but coming back, closing back above the 5-bar moving average, which is why it's giving it strength against the silver market as far as the gold-silver ratio is concerned. 62.78% retracement there, and trying to get back above the 5-bar moving average as I record. There's the smackdown by the bankers, and you can see the market's just been trading sideways since this happened. Got to get back above the DP. Again, only time will tell to see if they can do this. Dollar up strongly on Friday, which is what you would expect given the news. It was strong for the dollar on the basis of two reasons: that the economy is doing fine, creating 528,000 jobs, and I say that tongue in cheek, and also the prospect of further rate increases, which is positive for the currency. So stuck at the 20-bar moving average at the moment, bit of a retracement going on there. And finally, crude oil finally finding some sort of support there at 89% and starting to move back to the upside. So like I say, this week for me, it's the laughable 0.2% month-on-month CPI number on Wednesday. I can't wait. But until then, it looks like the markets are going to defy gravity and continue to, and also the news and all of the bad news, and continue to move to the upside as they've done so for the last 3 weeks now. Okay, that's it for this one. As ever, thanks for watching. See you in the next.